key in today's market is finding the land.
Welcome to the Root Review, episode 2.
Here with Bill Sunstring. He's a local Denver developer and owner of Sunstring 6 and focuses primarily on urban infill projects. Do you mind give us just a little background of your history and how you got to where you're doing what you're doing now?
Sure. So I'm a serial entrepreneur. I've been a CEO of a public company. I've owned private companies. About 7 years ago, in the real estate crash, I started buying tax liens and foreclosures that I'd sell out of, and that evolved into buying a foreclosure and fixing it up, which evolved into buying houses and fixing them up on fix and flips. That market started to get squeezed. I find in this real estate business is that you have to be flexible. You can't just say, I fix and flip single family homes, because that industry might get too tight and might go away for a year or two. Then a new pocket in real estate may open up. That may be commercial space, maybe rental apartments, maybe duplexes. So from there, I kind of moved into from fix and flips into new construction, and I enjoy new construction much more than the fix and flip. Still do fix and flips. We have a fairly large one going on right now, but new construction is the primary focus. And right now we're single family residences, duplexes, but we do have land secured and under contract to build multifamily and rental complexes.
So dive into that a little bit more. You were saying earlier in terms of the real opportunity in Denver. I kind of know this from working with you, but where do you feel like the real opportunity in Denver right now is today?
I call it market rate. So that means either under market or at market rentals, or market rate, which I classify as an under market multifamily housing. If you look at all the data of who's moving in here, and we're number 16 in North America of domestic immigration. We're number 1 last year in Ivy League graduates. We're number 5 in under 30 moving here. We have a massive influx of young, well-educated people. When we build these duplexes, single-family residences, our concept was, hey, we're building for millennials. Reality is they can't afford it. We're not building for millennials. We thought we were, but we're not. And if you can get a product to market in Denver under $500,000, at $450,000, people will be lining up at the door.
Right.
As land prices go up and construction costs go up, and we may sometimes build vanity projects. It's fun to put in that big bathtub. It's fun to do clear cedar siding. It's fun to really do nice, beautiful windows. I get concerned that we may be pricing things out of our market.
So the need coming out is probably going to be this lower fives.
Yeah, like 450 is a dream number. So we have a meeting with the city on Wednesday to try and discuss that. And the unfortunate thing is the city can sometimes talk out of both sides of their mouth, where they say, we have a great need for affordable housing.
Right.
Oh, well, we don't want to give you the density to do affordable housing. You've got to build a duplex and sell it for $700,000.
Right.
So it's kind of like, okay, what do you want, city?
Yeah.
What do you want us to do?
And so to hit those numbers, it really requires being able to do higher density because of the land prices that's pushing
The land
up.
prices. And you also have to search out more affordable land.
So maybe back out a little bit and talk about the projects that you've been doing up to this point and what's happening, where those have had to come in terms of price point, and how that's changed or grown over the last few years.
The easy example would be I think we call it design Utica, which was designed by Root Architecture. It's a beautiful, beautiful home. I think it's one of the nicest duplexes out there right now. And 3 years ago, we built that house for $670,000, and land for a duplex lot was about $160,000 a lot. And we sold that for $640,000.
Yeah.
3 years later, the exact same house, the exact same neighborhood. We're moving 2 blocks. That lot is now gone from 160 to 225,000. That construction cost for the whole building has gone from 650 to about 780,000, and nothing's changed.
Right.
The exit price has gone from 640,000 to 800,000.
So it's still working out.
Still
okay.
working. The math still works.
But what do you think's happening to so these like duplex projects that we're doing,
Yeah.
you know, need to be done on a certain zoned lots, and there's only
So
a
many.
limited area in Denver. So what do you feel like is happening to the supply where we put these lots? Do you think we have like enough home lots coming up in the future where we can still build these products? Or
I think there's lots of lots
yeah,
if you want to pay for them, and the lots are becoming more in demand, so the price has gone up. Yeah, how many years of supply is there? I think there's a lot of years of supply, because you have a lot of people living in houses that are like, oh, my home got rezoned UTU, so it can be split and a duplex can be built. I'm going to sell tomorrow. They're in their family home, they're raising children, they may sell it next year, they may sell it in 3 years. So I have, in the last month, I've placed bids. We're going to offer about 8 duplex lots. I didn't buy any because I thought it was overpriced.
yep. So they're still coming on the market, but
Still coming on the market.
everyone's getting eager about what their lots were.
Everyone's a little excited about what they think they can get for it.
And then it seems like maybe on the backside for those same home buyers, the question is, or sellers, you know, where do they go in Denver?
Well, exactly, they can't.
Right.
So a lot of the guys I've met with, so in buying these lots, most of them are private sales. So I've got 3 private sales that are pending. I'm just waiting.
Yeah.
One fellow's retiring this Christmas and wants to move to either New Mexico or somewhere in Arizona. So he's gonna leave. Another fellow, his job got relocated to Stapleton. His kids moved to Stapleton. He just wants to leave the city. But you can't. To think you're gonna sell your lot and you're gonna move somewhere in your neighborhood might be a little foolish.
Yeah.
Might be a little tough to do.
Right. But maybe there's some opportunities, like they're coming in, they're going out to another area.
I do have one lady which I really like. Her name's Leota. She said, find me a house within a block of where I live, and I'll trade you my duplex lot for a single family lot.
Yeah.
Go get me a house. I love the area. I want to live here. I understand that my lot's worth good money. My house is a bit beaten up. Find me a really nice single family home.
So
Buy
there
that
may
for
be
me
a
and
good
I'll trade you.
opportunity to trade off from if you're in a UTU zone area to go a USU.
Yeah.
And you think that the value that you can buy for a decent single family home in close areas is staying a little bit less?
It's reasonable.
Yeah.
But you're trying to find a nicer home than she has. So that might be a $450,000 home.
Right.
Potentially. And I'll just trade her. So there's opportunity out there, but I think in today's market it's all about having patience and keeping powder dry. There is a UTU lot coming up for auction on Thursday that the opening bid price is $150,000. So I'll attend that auction.
Yeah.
It might get overbid, it might not get overbid. And that's in Sunnyside.
So finding your lots right now in terms of places to resource land, what does that look like? And how many fishing lines and what kind of different places are you putting fishing lines out?
3 years ago, it was one fishing line. You wait for the real estate agent to call you.
Yeah. Now
there are door knocker campaigns, mailer campaigns, estate lawyers sometimes get control of these properties. You're scouring the auctions, and you still have the real estate agents.
Yeah.
There is a multitude of ways. Basically, whenever I'm building a house, if anyone walks by and stares at the house, I introduce myself and say, where do you live? And if they live on that same street and I know that zoning, I'll give them an offer on the spot. And if they say, well, I'm thinking about selling in a year, I'll say, well, here's my card. Please email me, and I put that on a list to follow up with them
So it's really basically having a large funnel and narrowing, niching down on what you want to do.
Yeah, the funnel could be bigger right now.
Yeah.
And you're just trying to get them any way you can. There's also wholesalers. I allow wholesalers, land wholesalers, to put signs up on lots I own. If I get first right of refusal, any call they get. So I've gotten one lot. I got a lot a few months ago on that way.
So, of the methods out there, is there one that seems to be better than the other, or is it just all a little trickle and having a large funnel out on it?
Fundamentally, I think the best method is to have a great relationship with a real estate agent, and they're out looking, and they can find off-market things, on-market things that are early, and get to you quickly, and you get and you have the money sitting in the bank. You can't, to think that you can go to a bank and get conventional financing to try and close on land to build a home. That worked 3 years ago. Now you need money. You need to say, okay, I will close in 2 weeks. I'll close in 10 days, no conditions. The money's in the bank.
So let's talk about that a little bit. I know you're a master. Awesome. I know you're a master at fundraising. That's one of the things that I'm blown away. Yeah, you're able to kind of put these finances together. So maybe talk a little bit about that, and how that's done in terms of putting together, financing to be able to do these deals.
From my background as an entrepreneur and running a public company, being a CEO of another technology company, running my own businesses, sometimes we would have needs for outside fundraising beyond banks. Sometimes we wouldn't. And I've become very accustomed to raising money or talking with people about the investment portfolio or adding an investment portfolio of real estate. And I think over the years, as an entrepreneur and also I also invest in stuff, I've become very accustomed or used to what this investment should be, what the legal paperwork should be, what the structure should be, what the investor should be expecting, what I should be expecting as running the pools of capital.
Yeah.
And I think it's a lot about just having the certain speak to be able to say, hey, this is what we're doing, this is where we're going, and then to follow through on those goals. Here's the paperwork, and everything's organized, and everything's put together in a way that someone can understand, and then they start making dividends. I think what happened was, I started out quite small, and I don't think I'm magic at raising money. It's just the first few houses cleared out, and the investors were making 35% return.
So what are the key indicators that investors want to see when you're approaching them to talk about making investments into real estate?
They want to see your documentation. They want to understand more about your background, which they can just Google as easily as anything. They want to know who you bank with, what your banking structure is. They want to know your budgets and your architect and your design work and potentially your land bank. Like, what are they investing in? The who, what, where, and why of a typical investment. What is their investment schedule? When do they need to give you the money? When are you expecting draws? When is their expected payout? If there's a bump in the road in construction, there's always bumps in the road. It's immediately notifying them that, hey, we're held up on this. Update photos. So it's basically just a bunch of rules and regs that both parties abide by. And then as the most important thing is that the person requesting the money has to stick to those rules and regs that you lay out, or the rules of engagement in the investor relationship. And a big thing for an investor is knowing that his money is secure. There's so much fraud in this world. And so the way all the documents are set up is that if an investor wants to run his own project, he actually has houses in his name. And any draw I pull, he will sign off on that draw. So he sees all the money flowing. So, and that gives investors a great sense of comfort. I know a lot of people that pool capital, but everything's in their name. Nothing's in the investor's name. I would never take on that investment. So I think I was able to sit back and say, hey, if I was to invest in real estate, and I was going to invest in this guy over there who wants to build a house, what would I want? What would I want that to look and feel like? And so kind of looking in the mirror and trying to reflect on that, and then I built my structure around that. Then it becomes quite easy, because as an investor, I would want a very secure investment, an investment I control, an investment I can see, an investment that there's a sunset to. The great thing with these investments is, when I say a sunset, it ends. So how the structures are set up is there's S corps and houses sit in LLCs, and when that one house sells, that LLC just folds and all the money gets paid out. And you move on to the next one if they want to.
Right. So what advice would you have to a new developer or investor that wanted to get into that market or that playbook game to start working their way up to there? Where would they start?
The investor, I'm not so sure. But the builder, I would say, be forthright, be honest, and be on top of your paperwork. Mm-hmm. Understand your product, understand what you're selling, and don't bite off more than you chew. Don't promise something you can't do. The problem with a lot of guys I see is, I could have easily, when I started raising money, I raised enough within 3 months that I knew I was done. I could have raised 3, 4, 5 times. I could have raised tens of millions of dollars. That doesn't do anybody any good, because I can't deploy that money. So the trick is all through honesty and integrity to say, hey, you know what? I can't deploy this, so I know you offered me X number of dollars, but I can only take this right now. Mm-hmm. And if I can, I'll let you know. Hey, I'll let you know down the road. So I've got guys waiting, and they stay in touch. And I'm like, I'm sorry. I'm working on it as hard as I can, but I'm not going to deploy money. I'm not going to ask for money irresponsibly. I could go buy a lot tomorrow that's overpriced and build a house, but I wouldn't be able to. The risk is too great.
Right.
For the investor.
So know your market.
Know your product.
Know your product. Lay out really clear, clean expectations on how the process is going to work.
Budgets, exit strategy, pricing, agent, marketing plan, and what that dividend will look like.
Yeah. And then you suggest setting up an S corp for each project, so that they have some ownership actually in the project versus a pool.
Yeah, there's different way to do it. You can pool capital, where the money is controlled by the pool, or the investor, if he has the wealth, can just buy that house in his own LLC, and then you have a partnership agreement, a joint venture agreement, where the builder is a owner of that project in that LLC.
And so in that case, would that be like a sweat equity exchange where you say the builder?
I think that's the easiest way to explain it, is that and it's different than a normal, hey, I'm a GC building a custom home making 15%. You are finding the land, you're site prepping the land, you're finding the architect, you're working with banks to clear the financing, you're doing all the draws, you're finding the agent to sell it. So you run the whole project.
And that's the real distinction between what you would call a builder and a developer.
Developer, yeah.
And in your model, the developer is actually also acting as the builder plus.
Yeah.
Yeah.
And so I would consider myself a briefcase developer. I spend more time now looking at land, meeting with banks, accounting, paperwork, all that kind of stuff. It's my and not to diminish the job of construction, but the construction to me becomes secondary. I need to find land, I need to find drawings, I need to get things permitted, I need to find capital.
Yep.
That's the stuff that can be tricky.
And what kind of return on investment should an investor be expecting if they wanted to stay work with you?
On a stable market, 15 to 18% on an annual return. And then all you do is you take a downtrending market, and what the market goes down by will probably hive off what you could make, because you can't sell the house for as much as you want. And then an uptrending market that also bounces it up. So we've exited out as high as 34%, and as low as, our lowest right now has been 22%, and our highest has been 34%. And I have to tell the investor every time that comes out, he's like, this is amazing, let's do it again and again and again. I said, well, you realize we're in a 17%, a 14 to 17% increasing market over the last 5 years. Like, the market's been crazy. Mm-hmm. So these returns, while we still look good for the next 2 years, are unsustainable.
So let's talk about that a little bit then. Where do you feel like the market is in terms of trend? And
getting back into the whole idea of being flexible as a developer. And I stress this is so important. I stress this to my investors that just because we're building a duplex today doesn't mean we're building a duplex tomorrow. We're looking for that next pocket within this world of construction. And the margins were phenomenal 5 years ago, 6 years ago in fix and flips. Like phenomenal. You could be in and out of a house in 4 months. You could make $100,000. Then the pricing started to creep up. Labor started pricing at the top end got stuck because it couldn't go any higher. And I call it the squeeze.
Yeah.
The squeeze play. And I'm now starting to sense that in duplexes. Land's gone up. Housing, the exit is working, but it's getting stuck. The price can only go so high. I mean, $800,000 is an incredible amount of money to pay for half a house.
And what does that lay out for like price per square foot? Are we
we range between 325 to 365 per square foot.
Above grade.
Above grade, yeah. And the average house is, I mean, 2,500, so 365, 375 is we're starting to push those numbers. And I mean, the homes are being sold to lawyers, doctors, downsizing, empty nesters. There's not a millennial in sight.
Yeah.
So I'm sorry, I may have gotten on top of another question, but
no, that's okay.
I think I sense a squeeze play now in duplexes. I sense it a little bit in single family residences. If you can find the right land, there's huge profit right now in building lower priced product.
Right.
Because you can get a higher return. People for lower priced product, because I've met with a bunch of agents, I've met with people looking at lower priced product, they don't care about the square footage. They don't care that they may not have a backyard. They look at the price and go, I can afford to live in Denver. So the keys are on light rail. You've got to be walkability light rail. So that'll allow you, with the light rail system, developers need to start analyzing where the light rail is going, what the plans are over the next 10 years. I mean, they basically budgeted out to 2018 on what they're building, and that's known, but there's more light rail coming in and buying land around those areas. If you can walk to light rail and you have a high density piece of property,
then you're in Denver, in 10 minutes. And you've got a whole connected system.
And unfortunately, I just lost on a lot. I lost by $20,000 for a lot that I could have built 90 units.
Yeah.
Across the street from light rail.
So that's another scale play.
Scale. You're climbing. I call it climbing the ladder.
Yeah.
And as more and more people pile in, you've got to move up the ladder to where that
do more quantity, lower price point.
And who knows, if we get a slight buckle in the market and the tree gets a big shake and a lot of people fall off and go away, I bet you'd be profitable able to build duplexes. So you've got to always have your eyes on everything and be ready to jump back into something if you see opportunity. But don't get stuck in something. If you get stuck, you'll get burned.
Yeah.
Because the formula that works today in real estate won't work tomorrow. Like where McDonald's has been selling Big Macs for 50 years, real estate doesn't work that way.
Right.
It's a different beast.
Yeah, so your thought is look for a little bit lower price point right now, a little bit higher density. Light rail would be key. If you could find something that you could get in. We're putting in the east line out to the airport, should be done this year, so that gives a huge connection from Denver to the international
market. It's going up 25 through Thornton, then you have the Gold Line, I think, going up to Golden.
Yeah.
There's lots of lines going in.
Is there a particular line that you think is a good opportunity?
I don't like the East Line. I kind of that whole area of Stapleton and Green River Ranch and Aurora is just coming to be. I mean, Aurora is spending a lot of money on their new town center. It's quite beautiful, their new town center, and some of the work they're doing in Aurora, but it still makes me a bit nervous. I prefer the Golden I-25 corridor.
Yeah.
Is my preference. And everyone has their own, everyone has their own ideas on what works, right? I kind of like that area.
Yeah. Well, this has been great. So tell us, if someone wanted to connect with you, and who would you be interested in connecting with? How would they get in touch with you?
Wow. I don't know, because I've always said that, well, the best would be email. It's just Phil, Phil, at Sustronk, SUSTRONK.com. That'd be the best way.
Great. Well, I appreciate your time, Phil. It's been really good.
Thanks, Zeke. Thanks.